Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. It's Friday. Happy Friday to everyone in the house, and welcoming you to the last edition of the Extreme Speed Live for this week. Well, before we kickstart the session, let's quickly confirm that we are good to go. If you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing hi. So typing hi just confirms to me that we are all good to go and this session will kickstart afterwards. So I'd like to see your feedbacks, please. All right, so let's see what we have here. I can see a couple of comments from here. This name here, I don't know. I can't pronounce this one. I think it's Asian. Malcian, good morning to you. Eloa, good morning. Kylo25, good morning to you too. Jason, good morning to you. Abdul, good morning. Hello, Carrie, good morning to you. Thank you very much, guys. And I think on this note, we shall be kickstarting the live session for today. So once again, you are welcome on board. And my own name is Sharif Daramola. And for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey as we take a technical dissection of the current market structure using fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the financial market. Well, today is the last trading day of the week, and you know how we treat last trading days of the week, which is always peculiar with market participants rounding off on their positions as they prepare for the new weekend. And in that regard, we are likely going to be seeing some movement in price action against the prior leading price action, which definitely will reflect on the chart as potential reversal patterns. So we are going to be taking that into consideration while we review the current market structures of the assets on our watch list for this week. So far this week, we have been monitoring 4 major assets, which includes the US All Spot, the USTech100, which is popularly known as the Nasdaq. We also have the GBPUSD and, of course, the XAUUSD, popularly known as the gold spot. So we are not just going to be predicting the market, but to master it, and together we are going to be deciphering the language of candles, understand the psychology behind price movement, and identify those golden moments when trading stars are aligned to give us an opportunity to trade. So with that being said, I would like to welcome those of us who are joining for the first time. You might be asking what this is all about. Well, as technical traders, we usually gather as a community in anticipation of the New York session, where we do come to review our existing positions if we have any, and of course use the data we have on the chart to strategically position ourselves ahead of the new week of the New York session. I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be discussing today, and of course be part of the subsequent editions, as the more time you spend with us, the better you'll become in understanding the strategy and eventually be able to use the information you have gathered to make your own independent trading decision. So once again, you are highly welcome on board. Now, with that being said here, let's dive right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And of course, for those of you who have been with us in this community, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So for this week, based on the assets we have on our watch list, we have been looking at the United Kingdom and the United States economic dockets this week. Now, for today, Friday, October 27th, we have a handful of impactful events we are going to be looking at today. The first one on the list is coming up in about an hour or two from now, and that is the core personal consumption expenditure. Well, for those of you who don't know, this data is usually released by the US Bureau of Economic Analysis, and it is an average amount of money that consumers spend in a month. And from what we know about this data, it serves as a significant indicator for inflation in the US economy, which definitely the Federal Reserve will be looking at for a clue into what they will be doing in their next interest rate decisions. And of course, generally speaking, a high reading is considered as positive and a low reading is considered as negative. Now, if we look at the previous data for both the month-on-month and the year-on-year, we have 0.1% and 3.9% respectively. And from the consensus we have here, it appears that the month-on-month is looking a little bit higher than the previous data, while the year-on-year is lower than the previous data, giving us a mixed reaction in that regard. So we are going to be looking forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? Then another important event that will be coming up today is the publication from the University of Michigan, and this is the Consumer Sentiment Index, which is a survey of personal consumer confidence in the U.S. economic activity. In fact, this data shows a picture of whether or not consumers are willing to spend money, and generally speaking, a high reading anticipates positive and bullish expectations for the US dollar. Now, the previous data for the month of September came in at 63, and economists are projecting a 63 again for the month of October, giving us clues that there is really no growth or decline in that regard. So it's more of an equilibrium at this point in time. So with this data we have on this on the economic calendar, we of course going to be looking forward to see what the actual data is going to be like. And as technical traders, you know how we do it. We do want to look at the current market conditions so that we can sniff out technical patterns and structures that we will be using to position ourselves ahead of this event. And we all know how this event, the anticipation of this event, has a tendency of influencing market sentiment, which in the long run will dovetail to the reflection of price actions on the chart. Now, talking about price action, the first asset we are going to be looking at for today, as usual, is going to be the US All Spot. And in fact, on the US All Spot, we have quite an interesting situation going on right now in this market, as price action has been consolidating between the $85 zone and the $83 area in the last 3 to 4 days now, which further emphasize the level of indecision in this particular market. Well, we all know how this market is majorly in correlations to the event in the Middle East, as we have seen that price appear to find a new support area around this $83 area. And the appearance of buying pressure here, the rebounding oil, is following recent U.S. military strikes on Iranian targets in Syria, which have heightened concerns around potential escalations in conflicts within the Israeli and the Hamas situation, which is currently going on. So we are going to be looking at how this event is going to be affecting the trajectory of price action from a technical standpoint. And before we go into that, let's run through how the week started for us in this community. Well, at the beginning of this week, it was more of a consolidation as we saw price action confined within the range between the $87.50 level and the $86.60 area to emphasize the level of indecision at the beginning of the week. And you know how we do it in this community. Whenever price action falls into this kind of range, giving us a flat channel, we usually exercise patience, waiting for either a breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. Well, the week did not start very well for us. Remember, we had a buy position triggered as soon as price broke out of the $87.50 level, but unfortunately, we were taken out of that position in a loss in such a way that sellers came in and broke down the support level where we had our sell stop order to trigger our first sell position for the week. And since then, we have been selling the US All Spot as we saw price continue to drop further to the downside, breaking down key significant structures such as the $85 area as we saw here on Tuesday, riding the momentum all the way into the $83 zone. So it was quite a profitable first half of the week as we were able to scoop in close to about 300 pips on the US All Spot. Now, during our live session yesterday, we were able to spot a new setup as we all agreed that our center of focus is basically going to be between the $85.30 level and the $84.85 area where we saw another opportunity to sell. Like you all know, we saw the breakdown of the structure. Price came back to retest the structure to incite another bearish momentum back into the structure around that $83 zone, giving us about how many pips that is. The first buy sell position gave us over 200 pips in profit. We also had the second position right below the $84.38 level, giving us about 160 pips, while the third one below the $83.82 level gave us about 100 pips before we were taken out of these sell positions with a considerable amount of profits. And I do hope you moved your stop losses accordingly. If you have done that, kudos to you and well done to you for closing in your positions. So with that being said here, what is going to be our plans ahead of today's trading session? Well, before we go into the details of what our expectations will be looking like for today, and considering those who are joining us for the first time, let's take a quick look at what the current market structure is saying from the higher time frame. And to do this, we are going to be scaling up into the 4 hours time frame. I think this was where our analysis started at the beginning of this week. Now, the first thing we observed on the 4 hours time frame was a downtrend continuation pattern, which was quite obvious after observing this impulsive bearish move that pushed price into the $81 area. Now we saw price action go into a consolidation phase, transition into a downtrend continuation pattern in the form of a falling wedge. And with a wedge like this, you know how we do it. From a theoretical standpoint, we expect a breakdown of the support line to give us an opportunity to sell, which interestingly was triggered on Tuesday to give us that sell momentum we had. Now, in addition to that pattern was this key level at the $87.50 area, which had played a major role in determining the direction of price action since the month of September. And of course, the key levels usually helps us to guide our trading decisions at the beginning of the week, as if price remains below the key level, we'll continue to look out for patterns and structures that supports the idea of selling, which interestingly lines up with the expectation we took advantage of at the beginning of the week. Now, with the situation we have at this point in time, as price action dropped into that $83-82 zone, we begin to notice the appearance of buy pressure around this area. Now, you all know that from a technical standpoint, whenever price action breaks down a structure such as the support line we have here, we expect that some point in time, due to profit-taking activities, price may likely retrace back into that structure to incite another downtrend scenario. Now, if we look at what has been going on here in the last 3 days in this market, it appears price action is gradually transitioning into a reversal pattern in the form of a double bottom structure. Now, if we look at this closely, taking into consideration the impulsive move that brought us to this point, we saw that the lowest point price action got to this week is the $81.80 level. We saw price climb back up, and the inability of sellers to break down the previous low was quite a sign that buyers are gradually gaining momentum. And if we consider the situation going on in the Middle East, where it has even escalated to the extent where the US military is now striking targets in Syria, we might likely be seeing a disruption in the oil supply, which of course will reduce supply, and then demand increases, and of course price is likely going to be skyrocketing. And with the appearance of higher lows here from a technical standpoint, it appears that we have a reversal pattern unfold on the chart right now. And you know how we do it in this community. Whenever we have this potential transition of price action into a reversal pattern, the next thing we want to be doing is to mark out the neckline which we will be using to validate this reversal pattern. And if you look at the structure closely around that $85 area, which happens to be a solid psychological area, appears to be the neckline that we are going to be using to confirm this reversal pattern. Now, with the way things are going right now, we will need price action to break out of this neckline, retest of that structure to incite an opportunity to buy. Now, let us look at what has been going on here. Now, based on what we've identified here, looking at this neckline here, price action has just tested that neckline in the last couple of hours. So what we are going to be doing now as technical traders is to exercise patience and wait to see how participants in the market will be reacting to that level around the $85 price to see what our next line of action will be. So in fact, I'm looking forward to an opportunity to buy. So if price will break out of the $85 area, we do want to be looking out for more opportunities to buy this asset. Now, with this information we have gathered on the 4 hours time frame, let's scale down into the lower time frame so that we can see in real time what is really going on around that area. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. Now, look at the structure here. In fact, I would like to readjust this level to suit the $85 area. So we have a beautiful $85 area, which you do want to be marking out on your chart right now, as we will be needing it to guide our next line of action here. Now, remember how important the $85 area has been since last week, Thursday. You see how this level had been a buying niche at some point before it was broken to the downside on Tuesday. Now, if price will break back above this neckline at the $85 area, then we will be back within the buyer's territory, looking out for more opportunities to buy. Now, for us to capitalize on the next move, our center of focus for today is basically going to be around the $85 area, where a breakout and retest of that structure will be all we need to capitalize on an uptrend scenario. Now, I'm only going to be buying anywhere around that area. Now, there is another caveat to this current structure, which I was able to spot this morning. That is a reversal pattern within a reversal pattern. Interesting, isn't it? Now, let's look at what I'm saying here. Now, look at the demand zone around the $83 area and the $82.50 level. As you will see, sellers have been finding it difficult to break through, giving us a zone that may serve as a potential platform for new buying opportunities in this market. Now, if we look at what happened here yesterday, we saw price drop into the zone. Price came back up, giving us another reversal pattern where the $83.82, the $84 zone becomes the neckline of this own reversal pattern. Now, on the 1 hour time frame, we have a reversal pattern. On the 4 hours time frame, we also have a reversal pattern. Everything is lining up towards the potential of buyers taking over this market ahead of the weekend. Now, with the situation here, we already saw price break out of the $83.82 and the $84 area during the early hours of today, and in fact there is a chance that price could come back and retest that structure. Now, for those of us who had missed out on this breakout of this neckline, let's see if the market will come back to retest the structure before this neckline at the $85 area will be broken to the upside. So one of the things we are going to be looking forward to today is if continued selling pressure persists below the $85 area, we might see price action crash back into the $84 area, where the resumption of buy pressure will give us an opportunity to join the uptrend scenario. So this is how we are going to be anticipating buying opportunities based on this current market structure. Now, in as much as we're looking out for buying opportunities here, remember that we cannot ignore the potentials that sellers can also come in. Well, since the beginning of the week, remember that we have been selling the US All Spot, so we cannot easily knock out the potential that sellers cannot come in anymore. Now, for us to sell the US All Spot, what is the condition that we want to see on this chart that will make us feel comfortable selling this asset? Now, let's look at the structure. You can see here that we have a barrier for sellers since the beginning of the week, as they are unable to break through the structure. Now, for me to consider selling the US All Spot today, I would rather want to see price slice through this zone, taking out all the buy positions within this area, build up some momentum, build up some liquidity, which of course will reflect on the chart as price retesting the structure before I want to be jumping into a sell position here. So the only reason why we are going to be selling is if price will break down that demand zone, and if that does not happen and price continues to remain above this demand zone, definitely we want to be looking out for patterns and structures that supports the idea of buying, which we've already identified now. So going into the New York session today, in summary, our center of focus is basically going to be between the $85 level and the $84 area, depending on the way price reacts to the structure. Like I said, we are going to either look out for the breakout retest of the $85 area to join an uptrend move, or price retracing back into the neckline of this mini double bottom structure to inside the uptrend scenario. So let's see what is going to happen here. It might take about 2 to 3 hours before this formation happens. Let's be on standby to capitalize on this move. So these are my views here on the US All Spot for today. If you do have any questions whatsoever, feel free to let me know in the comment section. So in that regard, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart. All right, so I see a couple of comments here. Hello, marketer. Good morning to you. Have to. Good morning to you. Max W, good morning to you. Max says that he's not seeing anything. I guess you would have to restart your app or your phone so that you can be on the same page with us. Please restart your phone and let us know how well you are doing over there. Christos 21. SY Yarki, good morning to you guys. Glad to have you around with us. So, in the absence of no questions, let's assume that we are all on the same page at this point. And in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list here is the USTech100, and in fact remember that since Wednesday we have been selling this asset, and in fact we have a considerable amount of profit running in our selling position at this point in time. Now before we go into the details here, let's run through how the week started for us. Remember that we were buying at the beginning of this week after observing, as usual on this asset, the consolidation phase where price was initially confined within the 14,615 and the 14,545 area to emphasize the uncertainty that gripped the market at the beginning of the week. Now, prior to our live session on Monday, I told us all that I had the sell position running after seeing that breakdown of that support line, given me about how many pips that was. That was about 130 pips before the bullish momentum came in. And one of the things we agreed here in anticipation of Monday's New York session was that if price will come back into the structure and we begin to see rejection, that is buyers finding it difficult to climb above that area, then we will be joining a downtrend scenario, which of course never happened, giving us the privilege of joining a bullish momentum after price broke out of the 15,454 area, giving us our first buy position for the week. And of course we did had another buy position at the breakout of the 14,615. Now we had the first buy position move over 200 pips, the second buy position move over 140 pips, giving us roughly 300 pips at the beginning of the week before that consolidation phase began. Remember, we saw this whole choppy situation where price was confined within the 14,750 and the 14,615 for about 24 hours before the support line was broken, giving us the privilege to join this current bearish momentum we are at this point in time. So currently we have about, let's see how many positions running. We have about one position here, we have two, then three, then the fourth one was around this area, then we had the fifth one here, which if you are still in this position right now, I will just suggest that you move all stop losses to anywhere around the 14,300, a psychological level. Let's secure the position at that point and see how the market will be reacting to this current structure. Now, in anticipation of the New York session, what is going to be our plans? Are we going to continue to look out for more selling opportunities here, or are we going to be witnessing some buy pressure, which I mentioned yesterday could be a retracement of this bearish impulsive move we witnessed in the last 3 days back into the structure that was broken on Wednesday. Now, before we go into the details, let's run through what things are looking like on the higher time frame so we can have an holistic perspective into what is going on in this market. And of course, for those of you who missed out on our earlier sessions, you have the privilege of being on the same page with us. Now, scaling up, we started our analysis at the beginning of this week on the daily time frame, where we were able to spot this interesting setup you see on your screen right now. So it's clear that price had been bullish since the beginning of this year, and as you see, we had an ascending trend line after connecting the series of higher lows, giving us something to work with. And not until last week we saw price action broke down that ascending trend line for the first time this year to incite the idea of a potential momentum shift. Now, besides the ascending trend line, we had our key level marked out at a psychological level around the 14,500 area, a level which had played a major role in determining the direction of price action since the month of June. In fact, this area had been known to be a buying niche, as every time sellers drop into that structure, we saw how bullish momentum gradually come in again to take sellers out of their position. But not until this week we finally saw the breakdown of this key level at the 14,500 with an engulfing bearish candle to incite the idea of a potential bearish momentum. However, in as much as we have this bearish move, we still expect price may come back and do some retest of structure. Of course, we know that whenever price breaks out of a key level such as this, we expect price to come back at some point to retest that structure to incite a downtrend move, hereby burning the idea of a counter trend opportunity, that is buying opportunities if we can notice bullish momentum around this area back into the structure for new selling opportunities. Now, in that regard, you will see that in the last 24 hours, we have a doji candle, as you will see right here, which emphasized the level of indecision at this point in time. Now, despite the positive GDP data that came in yesterday at a whopping 4.9%, which is quite beyond all expectations. Remember, the previous quarter was about 2.4, and this time around we have 4.9 beyond the 4.2 that was expected, giving us an insight into the resilient nature of the US economy at this point. Now, based on this and coupled with the tensions in the Middle East, market participants are in a dilemma right now, not knowing what to do. And this is reflecting on the chart as this doji candle, which is more or less an indecisive candle on the chart. Now, at this point in time, we are at a critical moment in the market right now, where depending on how price reacts to the zone we are, will determine what our next line of action will be. Now, in order to have a better perspective into this doji structure, into this indecisive phase, we would need to scale down to a much more lower time frame. So scaling back down into the 1 hour time frame so we can zoom into what has been going on in this market since yesterday's trading session. In fact, you will see that buyers have been trying to push price up, maybe in the form of a retracement of that impulsive move that brought us to the zone, but we have been seeing how sellers have been negating this attempt. Now, I would need a trend line here to help us to be able to guide our trading decisions today. So bringing out our line chart and connecting this point with the recent high, we have something to work with for today's trading session. Now, what this simply means here is that as long as price remains below this descending trend line, we shall continue to look out for selling opportunities. Now, in addition to this one, we also have another trend line here. As you will see, since yesterday's trading session, we have been noticing some higher lows, and if we connect them together, we have something like this to work with for today's trading session. Now, besides this one here, we should be having a key level somewhere around here at the 14,000, let's see, 210 area, another psychological level to work with for today's trading session. Now let's mark that out and pull it out further so that we can see things clearly. And here we go. Now, if price action, you know how we use our descending trend lines in this community. If price action continues to trade below this trend line, we shall continue to look out for selling opportunities and maximize the current sell position we are in right now. So if price action goes on to break down this ascending trend line, which is trying to build up a retracement of that impulsive move that got us to this point, breaking down the 14,210 retest of structure, we are likely going to be seeing another wave of bearish momentum. So for us to consider selling the US Tech 100 today, we want to see price drop below the 210 area, broken down the ascending trend line for us to feel comfortable joining a bearish move. However, in as much as we're looking out for a downtrend continuation here, we cannot ignore the potential that we could have a counter trend opportunity. And remember what I showed you on the daily time frame where price broke down that key level at the 14,500 on Wednesday, that we expect that some point in time price may likely come back and retest that structure to incite the downtrend continuation. Now, if we are going to be seeing a retracement or a counter trend opportunity today, then a breakout of this descending trend line will be all we need to confirm that we are good to go bullish. Now, this is a counter trend opportunity, of course, and if you and someone who do not feel comfortable taking counter trend opportunities, I would advise you to stay clear of this one and wait to see price come into the zone where we want to be looking out for setups to join the downtrend continuation. But if you are a counter trend trader, a scalper, and you feel comfortable in this kind of position, then we can look out for the breakout retest of the structure to join an uptrend situation back into the structure that was broken on Wednesday, dovetailing to a minimum of 230 pips to a maximum of 350 pips to catch here if price goes to the upside. So you will see here how this descending trend line is going to be playing a major role in determining the direction of where price will be going today. So I do want you to be marking out the trend line, the 14,210 level, as depending on how price reacts to this confluence will be giving us an insight into what our next course of action will be. So these are my views on the US Tech 100. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off. Wait for your questions and let's see how we move forward. And you can use that time to mark out these levels on your chart. You will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, let's take this as a confirmation that we are good to go. And it's on this note, we'll move on to the next asset on our watch list. So the next asset on our watch list is the cable market, a very critical juncture we are in the market right now, as the GBPUSD is navigating a challenging path amid a risk-on environment that isn't providing the expected support for this pair. Now, if we look at the trading activities, which has been limited within a range in the last 48 hours now, it's quite clear that there is an indecision going on in this market. Now, let's run through how the week started before we go into that detail. Now, the week started very bullish for us, of course. After identifying this range, we were able to capitalize on the breakout of the resistance line of that range to push price to the upside here. In fact, we were able to scoop in over 200 pips from multiple entries. Remember that we also had a buy stop order above the 1.218, giving us the privilege of joining that uptrend scenario. Now, we rode the move all the way into that high, which happens to be the highest level for this week at the 1.22890 area before the bearish momentum began. And for counter trend traders, we did spotted an opportunity to join a sell move if price breaks down both the ascending trend line here and that level at the 1.22450 area. And since that moment, price action has been dropping to the downside. Now remember that on Wednesday we also capitalized on a new sell position below the 1.21450, as this one also moved all the way into the 1.20750 level with about 70 pips before another wave of bullish momentum began here. Now, since price climbed back up here, now we are within an indecisive phase, as we neither know if price will be going upward or to the downside. Now that we are looking forward to the inflationary data coming in from the United States, that is the core personal consumption expenditure, which we talked about earlier, I think majority are looking forward to see what the data will be saying to give an impetus into the current market conditions. Now, there is something interesting I was able to show you on the 4 and daily time frame at the big and during our live session yesterday, and I would like us to take that into consideration too while we prepare for the New York session today. Now, right here on the 4 hours time frame, we initially observed the fact that price action has been finding it difficult to break through that zone between the 1.21 and the 1.20500 area to emphasize the level of indecision at this point. And because of this, of the inability of sellers to break through this area, we'll consider this area to be a buyer's territory, labeling it as a demand zone. Now, in addition to that demand zone was another pattern which now made this whole structure an ambiguous one for us to make a decision, as we were able to spot a trend continuation pattern. As you will see, following the impulsive move, we saw higher lows, then we saw lower highs, giving us a pattern that looks like a downtrend continuation pattern. And of course, theoretically, when we have this pattern identified on the chart, we need to see price break down the support line of that pattern to incite a downtrend scenario. Now, since price broke down the support line, it has come back into the support, as you will see here. And in fact, we have been seeing certain pressure persist around this area in the last 20 to 22 hours to further emphasize the level of indecision at this point in time. Now, with the information you have here, you will see that we are at a crucial juncture, as you will see right within this area around the 1.21300 area, a psychological zone if you will ask me. Price has been consolidating around that area, so we don't know if price is trying to retest the trend line to incite another downtrend situation. And in fact, if we consider the fact that price still remains above a strong and robust demand zone, we might likely be seeing price climb back above this trend line to incite an uptrend move. Now, to make us be able to capitalize on the next move that will happen in this market, we will need to scale down into a lower time frame to see how the market is reacting to this current structure. Now, scaling down into the 1 hour time frame, we'll begin to see things more clearly. As you will see, this is the structure right here. That's the 1.21300 zone. And in fact, it's quite clear that since Thursday, yesterday, price has been confined within the 1.21450 and the 1.21060 level, further emphasizing the level of indecision we have talked about earlier. Now, with the situation we have here, you know how we do it in this community. We of course want to exercise patience and wait for price action to either break out of the resistance line of that range to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. Now, looking at what we have here, it will make quite a lot of sense to position ourselves just right above the 1.21450, as price will be above the ascending trend line we identified on the higher time frame to escalate price further to the upside, and if price continues up, then the breakout of the 1.218 will be welcoming more buy positions here. However, if this area around the 1.213 continues to be characterized with selling pressure, then there are chances that price may break down the support line at the 1.21060 area to incite selling opportunities. Then a further breakdown of the lowest point price action has been for this week at the 1.2120750 level will be welcoming more selling opportunities. So basically, we have a simple setup to work with for today, as our center of focus is going to be between the 1.21450 and the 1.21060 level, where depending on the direction of the breakout here will give us an insight into the potential direction of price action. So these are my views on the GBPUSD. A simple setup, isn't it? So let's exercise patience and wait for the breakout for the signal to happen, and before we jump into any positions here. So these are my views on the GBPUSD. If you have any questions or you need some further clarifications as regard to the current setup, feel free to let me know in the comment section. So let's see if there are any questions as I take the next 10 to 15 seconds off, while you also use that time to mark out these levels on your chart. All right, so in the absence of no questions as regards to the current setup, so I'll take this as a confirmation that we are good to go this morning. And in that regard, let's move on to the next and the final asset on our watch list for this week. So the last asset on our watch list for this week is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. Now on the gold spot, we have a situation that has persisted here in the last 48 hours, where we have noticed that price action had continued to consolidate in this market, which further emphasized the strength of the sellers at this point in time. Now, fundamentally, we are in an indecisive phase right now, though the gold is currently trading waters above the week's key level. Remember, our key level was at the 1,985 at the beginning of the week. After being removed from the sell position we took advantage of yesterday. Now, with the way things are going right now, it appears that market participants are caught in a dilemma of strong United States gross domestic data and lingering Middle East concern as the focus shifts to today's US inflation data, which is coming up in about an hour or two or so. Now, as participants anticipate this event later today for more impetus into what we are going to be doing, let's see how we are going to be positioning ourselves ahead of today's trading session. Now, let me quickly run through how the week started for us here and how we were able to capitalize on trading opportunities at the beginning of the week before we find ourselves at this point. Now, the beginning of the week on the XAUUSD was nothing interesting at all, as we were taken out of our buy position in a loss. Remember that we bought the breakout of this range at the beginning of the week. We bought right there above the $1,978.50 level, but unfortunately we were taken out on Thursday in a loss on that position. However, after that taking out of that position, we had a privilege of taking some selling positions too as well, which really not did very well as price moved about 100 pips before we were taking out of that 1-2 at break even. And in fact, it was more of a consolidation phase at the beginning of the week. And while the market was consolidating within a range, we noticed a series of lower highs which emphasized that sellers were gradually gaining some momentum, so giving us that descending trend line to work with. However, in as much as we had lower highs in the market between Monday, Tuesday, and Wednesday's trading session, we realized that price action was unable to find lower lows. And the inability of price action to find lower lows was a sign that buyers are still very present in this market. Now, if we look at what happened on Wednesday, remember that we had this demand zone identified around the 1950 and the 1955, and despite that strong bearish momentum that gripped this market here on Wednesday, we saw how it became difficult for sellers to break through that demand zone. As you will see right here on Tuesday, we had a candle that looked like an hammer candle, which technically informs us of the presence of buyers around that area. And at the point of noticing this, we decided that we are going to be joining an uptrend situation only if price action breaks out of this descending trend line, hereby negating that trend line as a barrier for buying pressure. Now, we saw what happened. Price broke out of that structure. In fact, we saw price move over. How many pips was that? Over 180 pips in our favor. We had multiple entries. Remember, we also added positions at the breakout of the 1985 level. We also added position at the 1978.50 and then the 1990 before we moved our stop loss, taking us out with roughly above 100 pips in profit on that one. So we were able to recoup the loss we made at the beginning of the week on this one. However, since then, since the selling pressure resumed here, price has been consolidating to further emphasize an indecision here. Now, the last structure here that will be one of the yardstick that we will be using to guide our trading decision for this week is this ascending trend line. Now, remember that since the beginning of this month of October, price action has been very bullish, giving us consistent higher highs and higher lows. And when we connected a series of higher lows, we had this ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying that asset. However, something interesting is going on in this market, which we of course do want to take into consideration, and that is the fact that despite the strong bullish momentum since the beginning of this month, you will see how that area between the $1,997 area and the 1990 area had become a barrier for buyers, as every time price gets into this zone, we saw our sellers emerge to negate all potentials by the buyers to break out of that structure, making this area a strong seller's territory to look out for. And in fact, since last week Friday, we saw what has been going on here, selling pressure. We saw what happened here on Tuesday. We saw selling pressure here. We saw what happened here on Thursday, yesterday, selling pressure, and since the early hours of today, we saw how it has become difficult for buyers to break out of that structure. Now, if this persists and continues, then the chances that the ascending trend line that has been supporting the bullish momentum since the beginning of this month could be broken to the downside. Now, if this ascending trend line gets broken, then this will be the first time price will be breaking down that structure, giving us a sign that we might be in for a momentum shift, probably profit-taking activities, which will reflect on the chart as a sell-off. Now, to position ourselves ahead of today's trading session, we have a range we are going to be using to guide our decision. So let's zoom in and make things a little bit much simpler for us to see. Now we have the range between the 1,990 and the $1,978.50 level, which we will be using to guide our decisions for today. Now, if price action continues to trade within this range, we know that we are still in an indecisive phase. We need to exercise patience, and the only signal we are going to be looking out for is either the breakout of the resistance line for an opportunity to buy or the breakdown of the support line for an opportunity to sell. Now, within this range is our key level for this week, which is at the 1,985 level, which interestingly shares a beautiful confluence with the 1,985, making it a crucial juncture for us to look out for trading opportunities today. So what we are going to be doing here is to remain patient, and for us to sell, let's talk about the potentials of sellers first of all. What is it that we are going to see on this chart that will make us feel comfortable selling these assets? Now, the first thing, like I said earlier, is price should break down the ascending trend line, which has already happened right now with an engulfing bearish candle, giving us a beautiful signal for an opportunity to sell. Now, when the breakdown happens, I want to see confirmations to happen, and the confirmation will come in the form of price action coming back to retest the trend line or the 1,985, where the continued selling pressure, that is, buyers are finding it difficult to climb back above the 1,985. Then we want to be joining the bearish momentum all the way to the downside. And if price continues to break down structures such as the $1,978.50 level, which has been a buying niche since Wednesday's trading session, a breakdown will be confirming more selling opportunities and then adding more position to our sell position. So this is how we are going to be selling the XAUUSD today, and if price continues to drop further, breaking down the 1,970, we will be adding more sell positions to our existing trade. So this is how we are going to be selling the XAUUSD for today. So anywhere below the 1,985 area seems promising for buy selling opportunities. Now, in as much as we are looking out for selling opportunities, let's quickly take into consideration the potentials the buyers have in this market. Do the buyers have a say at all in this market? Do they have any potential of pushing price to the upside? And if they do, what do we want to see that will convince us from negating the idea of selling these assets and jumping into a buy position? Now, for us to consider buying the XAUUSD today, I would want to see price take out the resistance line of that range at the 1,990 area. Now, there are two ways to which we can capitalize on this. For those of us who are very profitable so far this week, that is, if you had been joining the buying opportunity we were taking, then you can afford to place a buy stop order above the 1,990 area. So if you place a buy stop order, what you're doing is you're simply risking some of the profit you had made so far this week. And in fact, if it doesn't work out, you know that you're only risking some of the profit you had made and it's not really touching your real portfolio. However, if you are new with us today and this is your first time taking a position, I will encourage you to exercise patience and wait for the breakout of structure to happen first of all, like a breakout like this, then wait for price to come back and retest the structure, giving us buy pressure on our lower time frame so that we can join the uptrend move. Now, price climbing further to the upside, breaking out of the 1,997 level, which happens to be the highest point price action has been in the last couple of months, will be welcoming more buy positions. So it's a simple setup we have here on the XAUUSD. All we just need to do is exercise patience, as our center of focus for today's trading session is basically between the 1,990 area and the $1,978.50 level. So let's see how the market will play out here. And I told us here that as long as price remains below the 1,985, a selling opportunity looks much more reasonable. So this is my view here on the XAUUSD. So I just encourage us to exercise patience and allow our structures to mature before you jump into your position. And if you do, you will be smiling to the bank. So on this note, I would like to ask if there are any questions. And if you have questions, feel free to drop them in the comment section. Or is there any particular area that you feel you need further clarifications? Let me know in the comment section, and I'm here and willing to be of help in that regard. All right, I see a couple of comments here. Luke here, good afternoon to you. How are you doing today? Luke is asking, talk to me. Do you really get in money like this? Well, I'm not sure that's a a real question, though. All right, VG Jane, good morning to you. Super Unk, good morning to you. Glad to have you around with us. Super Unk says, send me your NR. I'm not sure I understand what that means. John Hart, good morning to you. Queen 5508, good morning to you too. So in the absence of no questions, I want to assume that we are all on the same page. Okay, Albert21 says thank you. All right, I'll take that as a compliment. You're welcome and glad to have you around with us today. So, in the absence of no questions, I do want to assume that we are all on the same page, and it has been a wonderful moment with you again as we round off on today's trading, on this week's trading session. It has been a wonderful moment with you guys. We were able to take on 4 major assets on our watch list for this week, which includes the USOILSPOT, the XAUUSD, popularly known as the gold spot, the USTech100, popularly known as the NASDAQ, and of course the GBPUSD, and all of which we were able to identify simple setup using only fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the historical price movement of the asset, hereby giving us the information needed to position ourselves ahead of today's trading session. So I do hope you are able to mark out those levels as we did during the live session. So mark it out, wait for your setups to mature, and ensure that you are very patient for it to mature before you jump into any positions. For those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, I'm looking forward to seeing you same time on Monday morning, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well our assets have been doing and, of course, prepare afresh for the new week. On this note, I wish us all the best of luck and do have a wonderful weekend out there. Bye-bye.